Hi, hello everyone. Thank you for joining us today. Our topic today is just in time for tax season, and we recently were able to speak and work with Derek Davis. He's the founder of Shared Economy CPA and Tabby, and he had a lot of great information to share with us. So we decided to hold a webinar so we can share it with all of you. After the webinar, we'll have a Q&A, so please put your questions in the chat box on the right-hand side or on the event page, and we'll make sure to get those answered for you. So without further delay, Derek, will you give us a little tips and all the things that we need to know about the tax?
I'm Derek. I'm the co-founder of Tabby, which is a mobile application that helps 1099ers keep track of their business expenses to pay less taxes, as well as the Shared Economy CPA. I have a quick little kind of presentation to go through with regards to home sharing tips for Airbnb hosts, HomeAway hosts, as well as VRBO and Roomorama, and any sort of shared home service platform. So, kind of what is a 1099? So 1099 is kind of an independent payment between two third-party entities, and it includes independent contractors, consultants, investors, as well as Airbnb hosts. So this is kind of what a 1099 tax form looks like. I think one of the most important things to kind of stress is that with a 1099 tax form, you don't have any taxes withheld. So if you are a W-2 employee, you'll notice that what's reported on either your direct deposit or a personal pay statement has taxes withheld. This is not the same as a 1099 tax form, such that any amounts that's reported on your 1099, you'll be required to pay taxes in full. So, for example, if you made $10,000 in 1099 income, you're expected to pay the total amount of taxes on that. So you'll be expected to owe taxes on $10,000. So I think kind of the biggest question that kind of arises with Airbnb hosts is, do I report my income on a Schedule C, or do I record my income on a Schedule E? And kind of the real main test to kind of look for is material participation, which kind of means, did you regularly, continuously, and on a substantial basis engage in your Airbnb activity? So here's kind of a 7 bullet point test that is provided by the IRS to determine if you materially participated. And why this is important is because if you did materially participate in your Airbnb activity, it could be considered on Schedule C as opposed to Schedule E.
Great, perfect. So if you could just go back maybe to the 1099 real quick and just hit all those bullet points real quick.
Yeah, definitely.
Cool. Thank you.
Yeah, oh, definitely. So this is a 1099 tax form. This is a 1099 miss. I believe for Airbnb, they're sending out a 1099K, which means that it's a payment. 1099Ks are for payment processors. So what that exactly means is that if you receive a 1099K, Airbnb is classifying themselves as an intermediary. So what they're saying is that Airbnb simply facilitates the transaction, and if you're kind of trying to determine where to put your Airbnb income, you'd want to either look at these two tax forms, which is Schedule C or Schedule E, and as I kind of previously stated, if you materially participate in the activity, which means that you qualify for any of these 7 bullet points below, you could be considered having Schedule C activity, and if not, it would then be considered Schedule E. Schedule E is mainly for passive income. So what passive income means is, think stocks or bonds. Stocks and bonds are ways that you generate revenue, but you don't really have to do anything for them. So what I mean by that is that you kind of, you buy the stocks and then you kind of just sit on it. And, if over the course of a year you make $5,000, you didn't really have to do anything to get that $5,000. However, if you're a rideshare driver, every dollar you earn by giving people rides. So that's how you materially participate in an activity. So why Schedule C or Schedule E is important is for the following reasons. If you have Schedule C activity, and that's where you want to record your Airbnb income, you would be exposed to self-employment tax, whereas Schedule E, you would not. So, if you're looking at this and thinking, well, why would I pay self-employment tax if I don't need to? Well, one, it's important to definitely follow the rules, and two, it's important to note that if you have Schedule C loss, that can be netted against your other sources of income. So say, for example, you have a loss on your Airbnb activity such that you can incur a lot of expenses this year to get your Airbnb property up and running. You can potentially net those losses against W-2 income. So when kind of trying to determine where you fit after evaluating the material participation test, it's important to kind of know how that would affect your overall income taxes. So this is kind of just a hypothetical example of calculating what you owe. So if you have $35,000 in 1099 taxable income, your self-employment tax would be approximately $5,000, and this is assuming that you're a single filer and you put your Airbnb activity on Schedule C. You would have approximately $5,000 in self-employment tax as well as $3,000 in personal income tax. So if you look at the personal income tax number, it's currently $22,000. So how I arrived at that figure is $35,000 minus your standard deduction minus your exemption, which is one person as you were a single filer, and you can actually deduct half of your self-employment tax. So that brought me down to the $22,000 mark, which is multiplied by your marginal tax bracket is around $3,000 or a little south of that. So the total taxes that would be due is $8,000. Which is a lot of money. And this is also assuming that you are not keeping track of your business expenses. So the total amount of earnings that you have going towards taxes is approximately 22%. So that scenario is exemplified in scenario 1 on the left, and then scenario 2 on the right is someone that is keeping track of their business expenses. So as you can see, if you do keep track of your business expenses, and note that this is a hypothetical example, the potential taxes that you would owe is dramatically less. So it's really, really important to keep track of all your business expenses, because that's the golden key to reducing the amount of taxes that you have to pay, both on your self-employment tax as well as your personal income tax. So going on to the next slide, what exactly are business expenses? And this is from IRS Publication 535, Section 1 on deducting business expenses. Pretty much the overview is that business expenses are deductible if you are engaged to operate to make a profit. So say, for example, if you have 3 years of operating losses on your Schedule C, that will generally raise a red flag from the IRS's perspective, because what they're saying is that you're not operating to make a profit. This is a hobby, and the only reason why you're engaging in this hobby is to have losses. So it's important to note that if you have too many years of operating losses, that can be a red flag trigger, and you may get audited by the IRS. So specifically, what can you deduct? To be deductible, a business expense must be both ordinary and necessary. Ordinary in the sense that it's common and accepted in your trade or business. So, an ordinary expense may be bed sheets for Airbnb hosts, because, to run a Airbnb, you need to have clean sheets. And then one that's necessary. So, if you do incur cleaning expenses, that can be considered necessary, because if a host or if a potential guest comes and stays with you, and the room is messy, that you'll definitely get bad reviews and no one will want to stay with you. So I guess here's some kind of examples of business expenses specifically for Airbnb host, and that includes food and beverages for the guest. If you use your laptop to correspond with guest or your cell phone, you can deduct a proportionate share of your cell phone bill. So say for example you are spending half the time on your phone talking to a potential guest, you would deduct half your bill. And rent can be a huge expense, but it's important to note that according to a 2006 tax court ruling, that the room needs to be regular and exclusive use. So in a 2006 tax court ruling, there was a bed and breakfast family that had one of their rooms rented out, but they only had it rented out 20% of the time, and the other 80% of the time they were personally using it. And what the tax court said that they could not deduct their rent because it was not exclusively used for business. That doesn't mean that it has to be rented out 100% of the time, but that does mean that it needs to be exclusively used for business. So it needs to be at least listed on Airbnb. And then there are other costs that are indirectly kind of related to your Airbnb business that you can also potentially deduct, such as going to and from the store to buy food and supplies for your guests. That can also generally be considered deductible. So last but not least, Tabby is just a free mobile application that will allow you to connect all your debit and credit cards, and it allows you to easily swipe if your expenses are business or personal. And for all of your expenses that are swiped business, your tax deductions grow. So it helps you pay less tax, and it also allows you to kind of keep notes on what your expenses were incurred for. So with that, I think that is my presentation.
All right, great. Thank you for that. That's some good stuff you share with us there. And we're going to check for any questions. Any questions have come through, and if not, we've got a few as well. So when you get to what I was writing down here, so what are maybe some expenses that are overlooked by Airbnb hosts? I see you wrote the common ones down, but is there anything that peculiar maybe for specific situations? Maybe if you're renting, or you're providing maybe entertainment things like ATVs or boats and things like that to use. Can you write off those amenities, or is that not necessary enough? When do you draw the line as something is necessary for the experience of an Airbnb host who has something like that?
Yeah, that's a really good question. I think it really determines based on your property. So say, for example, if you have a property in Lake Tahoe and one of your key selling points is, we have a boat that you can use, that then may be considered deductible, because it kind of adds to your property, and it adds also to your competitive advantage. I think a really kind of commonly overlooked deduction by hosts is the commission fee that's taken by Airbnb. So when Airbnb sends you the 1099, it's going to be the gross amount that you received. So what's shown on your 1099 is going to be more than what's shown on your Airbnb dashboard. On your Airbnb dashboard, they're already taking out their 3% fee, but in the 1099, it's the total amount. So it's really important to make sure that you're taking note of the 3% fee that they're charging, and it's important to deduct that.
All right, great. Thank you for that, Rad. It makes very much good sense. And then what are some recommendations outside of, if you don't have your phone with you, you don't have the Tabby app going to track all your expenses, how often do you recommend sitting down to go through all of your expenses? Is it something you should do weekly, or should you do monthly? Is there any preference or recommendations you have for your clients?
Yeah, for sure. I mean, if the client has time, I would definitely make sure to sit down weekly. It's really important to kind of understand your expenses, because if you aren't keeping track of your expenses, you really have no idea if you're actually making money or just losing money. So if you can do like a weekly or at least monthly check-in on your expenses, you'll know whether or not you're actually making a profit or just losing money. So ideally, we'd like to recommend that our clients, check in once a week, but if not, once a month at least.
Okay, cool. That's a good recommendation. I would say the same thing. The more often you check on your expenses, the easier it will become. It's a pretty daunting task sometimes when you run a business or multiple businesses, to keep the numbers straight.
Hmm.
So, lastly, what about like capital expenditure items, such as the boat or things that are more expensive? Can you like do a depreciation? Would you recommend that, or taking all the expense in one year? What are your thoughts on larger purchases for your property?
Yeah, so that's a really good question. So the IRS does have special publications surrounding whether to expense or depreciate, and it's really important that if you're buying bigger ticket items to either check with the publications or check with your local accountant or CPA or whoever usually helps with your tax situation to make sure that you're complying with the rules. But specifically speaking, it just depends on the type of assets that you're purchasing.
Okay, great. Well, thank you very much. Let me check and see if there's any questions from anybody else. I don't see any other questions. So again, Derek, thank you very much for your time. We appreciate it. Everybody should check out